All right, let's get right into it. We're talking about something huge today, an update that honestly affects every single one of us with a bank account in India. The Reserve Bank of India, the RBI, has just dropped a brand new master plan for how banks are supposed to fight fraud. And I'm not talking about a few small changes here and there. This is a total rewrite of the entire playbook.
So, have you ever actually wondered how your bank catches a fraudster? You hear about these scams all the time, and it kind of feels like this mysterious behind the scenes thing, but it's not a black box at all. There's actually a very clear step by step process. So, let's peel back the layers and see exactly how an investigation gets going from that very first flicker of suspicion.
And here it is. This is the official document that's making all this happen. It's called the Reserve Bank of India Directions 2024. You can think of this as the new official playbook. It's got all the rules, the whole framework for how every single commercial bank in the country has to prevent, detect, and report fraud from now on.
Okay, so where does this whole process even start? Well, it doesn't begin with a big confirmed crime. It starts way earlier, with just the first whiff of smoke. See, this new framework is all about catching things early, and it has this really clever system for taking a small suspicion and escalating it when it needs to be.
So let's break down these two key terms because they're super important. First up is the early warning signal, or EWS. Just think of this like a smoke detector that starts beeping. It's not a fire yet, but it's a sign that something's not quite right. Maybe a weird transaction, something out of the ordinary. But then if you get enough of those beeps, enough of those signals, that's when things escalate. The account becomes a red flagged account, or RFA, and that's the full-blown fire alarm going off. It's the signal to launch a real investigation. And this really shows you how that alarm system works, step by step. So first, the bank's system picks up on those early warning signals, the beeps. Step 2, if there are enough of them or if one is serious enough, the account gets officially stamped as a red flagged account. And that's the big trigger, step 3. The moment that happens, the bank has to launch a full-on formal investigation to figure out what's really going on.
All right, so now we're in full investigation mode. And the second an account is red flagged, a clock starts ticking. This is not some endless, open-ended thing. It's a race against time, a really structured investigation with a hard deadline. 180 days. That's it. That is the absolute maximum amount of time the bank has. From the second that account is flagged, they have 6 months, 180 days, to wrap up their entire investigation and make a call. Is it fraud or not? You can imagine that puts a ton of pressure on the banks to get moving and be decisive. But, and this is so important, just because there's a deadline doesn't mean they can just rush to a judgment. Check out this quote. It's straight from the RBI's rules. It says banks have to follow the principles of natural justice. Now, that might sound a little formal, right? So what does it actually mean for the person whose account is being investigated?
Well, it basically means everyone gets a fair hearing. Here's how it works. The person or the company gets something called a show cause notice. This is basically a document that spells out exactly what they're being accused of and all the evidence the bank has. Then they get at least 21 days to respond, to tell their side of the story. And after all that, the bank has to issue a final, detailed order explaining why they made the decision they did. It's all about making sure the process is transparent and that everyone gets a chance to be heard. Okay, so let's say the 180 days are up, the investigation is done, and the bank has decided, yep, it's fraud. So what happens now? This is where the real consequences start to roll in, and we're talking law enforcement, serious penalties, the whole shebang. Now, you might think they just call the local cops, but it's way more structured than that. Who gets the call depends entirely on the type of bank and how much money we're talking about. So take a look. If it's a public sector bank and the fraud is over 6 crore rupees, that case goes straight to the top, to the CBI. But for private or foreign banks, the bar is a lot lower. Anything over 1 crore goes to the Serious Fraud Investigation Office. And for all the smaller cases, below those amounts, that's when the local state or UT police get involved. So it's a really tiered system.
But reporting it to the police is just one part of it. There's another huge direct penalty for the person or company found guilty. In one single powerful word, they're debarred. And for how long? 5 years. For 5 whole years, a fraudulent borrower is banned. They're completely cut off from getting any new loans, any new credit from any institution regulated by the RBI. Think about that. That's a massive penalty. It's designed to hit them right where it hurts the most, their ability to access money. But these new rules are about more than just catching and punishing one person at a time. The bigger idea here is to make the entire system stronger. The playbook is designed to learn from every single case to build a better defense against whatever comes next.
So, how did they do that? Well, a few key ways. First, for every single fraud, they look at staff accountability. Did someone inside the bank drop the ball? Second, auditors are now required to report any sign of potential fraud straight to the top brass. And third, and this is a big one, all banks have to share their fraud data in something called the Central Fraud Registry. This creates a giant shared intelligence network, so if one bank gets hit with a scam, every other bank can learn from it and protect themselves.
Which, of course, brings us to the big final question. There's no doubt the RBI has created a system that's stronger, faster, and fairer when it comes to dealing with fraud. But we all know that fraudsters don't stand still. They're always coming up with new tricks. So is this new playbook going to be enough to outsmart the fraudsters of tomorrow? Is it enough to stay one step ahead in this constant cat and mouse game? Well, that's really the multi-billion-dollar question, isn't it?